Good morning, everyone. This webinar is being witnessed by a lot of people for the last few months. Many people are associated with us virtually today and attending this webinar, so my heartiest welcome to all of you. This is Kajal Jaiswal, and once again, I take all the pleasures to welcome you in our 8th webinar on indirect tax organized by Tax Connect and Vil-Gst. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is a qualified CA, LLM, and LLB. He is a chairman of the Indirect Tax Core Group of CII. Also, he is the chairman of the Fiscal Affair Committee of the Bengal Chamber of Commerce and Industry. He is the member of the Managing Committee of the Bengal Chamber of Commerce and Industry. Now, I would like to request Mr. Vivek Jalan to take the session forward. Over to you, sir.
Thank you, Kajal, and welcome to all the participants in this webcast. This is the 8th monthly colloquium which we are having between Vil-Gst and Tax Connect. Although sometime in 1 or 2 months, we have clubbed it like in this month since there was a budget workshop on the 2nd of February. So in February, we did not have this colloquium. But nonetheless, I will try to cover the developments over the last few months in this webinar. So as far as indirect taxes is concerned, for direct taxes, we have other webinars on our monthly updates, for which you will all also get the updates. So yeah, to start with, now there are various topics covered in our brochure. I will try to cover all of them in this webinar, subject to, of course, the time limitations, because a lot of developments have happened, and I would like to stress upon the critical developments primarily, which would be applicable for most trade and industry. Friends, over the last 1 year or so, we have seen an increase in the litigations, GST audits by the GST departments, scrutiny, summons under GST. They have been challenged across various courts in India. You have all handled it with the GST departments across India. And there have been a lot of understandings on how to handle the litigation. But still, it is evolving, and over the next 3 to 4 years, it will keep on evolving before it is actually streamlined. So, first of all, in this webinar, we will discuss on the handling of litigations under GST from technical aspects as well as from pure constitutional aspects. In this budget, we have seen a lot of amendments in GST, while the finance minister's speech did not have much in it for GST, but when we actually saw the fine prints of the Finance Act, there was a lot in it, especially for GST and of course some for customs also. That has been discussed by us in our budget workshops. It has been discussed across the indirect tax circles. But what we will discuss in this webinar is kal ki or. How do we move forward in this GST regime? हम कल कैसा अपना GST regime में करेंगे और कल हम कैसे अपना shape up करेंगे GST regime में? That we have to understand, and this we will discuss in this workshop. Of course, we will also discuss the year-ending checklist from the indirect taxes point of view. Of course, from the direct taxes accounting point of view, we will discuss in other forums. So let us start with the trend litigation issues under GST, and the most important issue today, which has not been taken up, I think, in any other forum. But when you study the orders and the instructions of the state governments, you get a lot of insights. And when I was preparing for this webinar yesterday night, I saw this is a very important aspect which will help all of us sitting over here for handling the GST audits by the GST departments across the country. Friends, we have all handled GST audits under Section 65, where the GST department asks us for providing certain documents either in their premises, or it asks us, just a second. Yeah. So these GST audits by the GST department sometimes are also conducted at the premises of the taxpayers. Friends, many a times and most of the times, in fact, across the country, I have never seen a GST audit which is initiated under Section 65 being completed before 6 months. In one of the instances, in Chennai, one of the GST audit has been continuing since the last 1.5 years. The officer says now I don't know what has happened, but your taxpayer's name should not have been here. But since it is there, I am requiring the document. So we supplied all the documents to the officer. And then he has said, see, I will not do an audit in this. And it is from 1.5 years. So he said that, sir, you please close the audit. You please give us a confirmation. He said, okay, I will give you a confirmation that I have received all the documents. No other documents are required by us in the GST audit of this taxpayer. So friends, here, Section 64(5) subsection 4 will come to your rescue. 65 subsection 4 provides that any such GST audit should not continue for a period of more than 3 months, and it can be extended by maximum up to a period of 6 months. The question is, this period of 3 months or 6 months, 3 plus 6, that is 9 months, this is from which date? Which date will be relevant to take it as the start date? So it is provided in the explanation to Section 65 that the date of commencement of the audit shall mean the date on which the records and other documents called for by the tax authorities are made available by the registered person or the actual institution of audit at the place of the business, whichever is later, right? Now, first of all, what happens? The word here is later, right? So if you give the audit or the documents to the department or the institution of the audit at the premises of the taxpayer, right? Whichever is later. So once you give all the documents to the department, and within 3 months, if the department does not start even the audit, it can be understood that the audit is deemed to have been completed and the time barring period under Section 65 subsection 4 can be considered to be completed. You will ask me a question, sir. After 6 months, the department says, okay, now I will visit your premises. then what do we do? Friends, the answer is why this word later is here. It cannot, this word later cannot infringe upon the limitation which is broadly specified under section 65, which is 3 months from the date of commencement. That is from the date when which you have provided all the documents required to the department. So, as a matter of handling these GST audits, it is important that we make or a communication, or at least we make a communication to the department that all the documents as required by you in your notice dated so and so have already been supplied to you. That is the date from which these 3 months will be calculated. And if the department after 3 months does not complete.
So section 65 subsection 4, the broad time limit of limitation provided is 3 months from the commencement of the audit. And once you supply the documents to the department within 3 months, or maximum if in the extended period within 9 months, if the audit is not completed, you can always take a ground that now the GST audit for that period is barred by limitation under 65(4). Friends, in this connection, a West Bengal order has been issued by the State GST Commissioner granting an additional period of 3 months, which means even the state has taken cognizance of the fact that their officers cannot complete the audit within 31st of December 2021, and therefore they have granted the extension. Had they not taken cognizance of this, then there would have been no extension, and they would have gone on to litigate that, okay, we will visit your premises, and from that date 3 months will be counted. So here our suggestion, as we have discussed, is the moment you supply all the documents to the department, please give a clear communication that all the documents which have been required by you in your notice has been supplied to you. This is very, very important to invoke this limitation period. Friends, another important issue which we have advised all the taxpayers is this renting of premises, right? Many a times what happens, one of now the public sector undertakings, they asked us a question that, see, we have our own undertaking, we have a subsidiary, we have a building in the holding company, and the subsidiary also uses it. I said, sir, please get into an agreement with the subsidiary company where you have maybe a debit note system, right? But it is better to always have a rent agreement whereby the subsidiary who is using your premises will pay the rent to the holding company, because you are related persons in terms of explanation to section 15 of the GST Act, and in terms of section schedule 1 of the CGST Act. In case of related person, any supply of services even without a consideration would be considered to be as a supply. So friends, similarly, it was held by the advanced ruling authorities, although I understand that some of you all may always bring up the question that advanced ruling is applicable to that particular appellant or applicant, but it gives us an understanding into the act. In the case of this Shanmunga Durai, the Tamil Nadu Advanced Ruling Authorities has held that where the partner's premises have been used by the partnership firm, even then it would be considered to be as a supply, even without a consideration under Schedule 1. Therefore, wherever you have in your companies, in your organizations, any such rented, any such premises of a related person, it can be a partner of the organization, it can be subsidiary, it can be holding company, associate company in which your holding is more than 20%, etc., etc., or a director's premise which you are using as your company's place of business, always get into a rent agreement with that person with or without GST to negate this issue. Another, across now, especially in the eastern states, we have seen this, that many a times DRC 1A is issued, and thereafter directly once you reply to DRC 1A, then directly an order under DRC 7 is issued, right? Or assessment order is issued. Friends, this is not the right way. DRC 1A is a communication. It is not a show cause notice. It is a communication which is in the nature of pre-show cause discussion. If you remember, those of you who have practiced VAT, there was in many of the states, even in central excise and service tax at the FAG end, it had come, a pre-show cause discussion was always there. Even in income tax now it is there. So DRC 1A is in the nature of pre-show cause notice or pre-show cause discussion. After DRC 1A, it is important for the officer to give you a DRC 1, that is a valid show cause notice. And thereafter, only after you reply to the show cause notice, only then he can issue a assessment order. Only after giving you a DRC 1A, that is a pre-show cause communication, he cannot issue that directly a assessment order. The same has been held by the Madras High Court in the case of VRS traders. Investigations, now hardly you see any hearings by the department. 90% of the times across the country, there is an invocation of summons. There are investigations. Section 71 of the CGST Act, that is hardly invoked across the country. What is invoked is Section 67, that is investigation, inspection, search, seizure, because it gives a wider scope to the tax authorities. If during investigation any problem is found, they can immediately convert it into search and immediately threaten seizure. So the question is, in most of the cases we have seen across the country that investigation is or inspection is initiated and thereafter it goes on for months and sometimes more than years. In fact, what we have seen, 90% of our cases, a summon or an investigation or a search or seizure. Although maybe if there is a seizure of a premises, then the seizure notice can be withdrawn, but the inspection, etc. goes on. The show cause is received hardly after 1 year, 1.5, 2 years. This process has been struck down by most of the courts across the country. In the instant case, Gujarat High Court in the case of Trishna Trading Service Private Limited has struck this down, and it has held that the investigation show cause, the show cause notice is the end of the investigation phase and the starting of the assessment phase. Even yesterday, you would have seen that there is a notification from the CBIC or the customs. I think that is that the additional commissioner, joint commissioner, etc. They are all authorized to issue show cause notices. I think that is in customs because of this Canon India judgment, which was reversed or negated by the finance bill. So here the point is that the court has held that the investigation or summon proceedings that should go on only for a time bound period. If it goes on, say, more than 6 months, 7 months, your investigation has not ended, you are constantly summoned by the department left, right and center. Every week they come to the office and they issue a summon notice. Ye chalega nahi aur. It has to end somewhere, the summons. Even in fact, in the Bombay High Court very recently has also struck it down, and it has also instructed the CBIC to lay down an SOP for the summons. In that case, only day before yesterday, I was speaking to the counsel advocate Vinay Sharaf, who had argued this case before the Bombay High Court. He said that I had made a complete schedule when I was presenting before the Honorable Bombay High Court, and even verbally they have called my client for the taxpayer for summon. Verbally phone करते हैं कि आ जाइए summon है आपका. Even those verbal, he had made a schedule and he had presented before the High Court that these are the number of times we have been called for summons. Even we have litigated this and got a favorable order in many of the cases in High Court of Calcutta, etc. And the courts are very, very clear. They have instructed the CBIC that, gentlemen, you cannot carry on the investigation for a indefinite period of time. You have to issue the show cause notice. Number two, summons, you have to have an SOP for summons. Summon cannot be a means of harassment. So these are the points which you must take up during the investigation phase whenever you face one. Okay, now there are diverse judgments on payments made under threat and the refunds of the payment. In the case of Bundle Technologies Private Limited, which you better known as Swiggy. Now, what they had done during investigation, they were made to pay a certain sum of money, right? And they had already always paid it under protest. Now, even during the investigation was on, they claimed a refund of this payment made under protest, right? After a few months, they went for a refund. Department, of course, they will not give you a refund, especially if it is a DGGI. Now, the Honorable Court in Karnataka, it is held that, see, investigation and payment under protest, the refund of the money paid under protest, these are two different, completely different cases. So if the payment has been made under protest and the investigation authority does not have the right to collect the money, then under Article 265 and 300 capital A of the Constitution, this is a wrongful payment being forced to the taxpayer to have been made. And therefore, the refund was due even the investigation was on. It held that you can take a bank guarantee, but you have to refund this amount of money. It was a huge sum of money. Friends, very contrast, the Calcutta High Court, in the case of Jayanta Roy, has held that, see, during investigation, the taxpayer, it buckled under pressure, whatever it did, it paid the money under DRC 03 as voluntary payment 73.5. Nowhere it had mentioned that the money is being made under protest. Then there is no question of refund of the money, right? And thereafter, once you have made it under voluntary payment and 1 or 2 months, you have not even required the refund of the money, you have not contested that payment made voluntarily, which you have paid during investigation, then you cannot play a hot and cold. You cannot go to the High Court and say, gentlemen, sir, Lordship, we had paid it under coercion. So coercion, when you are making a voluntary payment under DRC 3 during investigation or whatever, and you stay quiet for a reasonable period of time post that. Thereafter, suddenly after months, you cannot just wake up and allege that it was made under coercion. So friends, it is very important, and we advise all the taxpayers that in case you are making any payment during investigation under protest, right? Please do not buckle under pressure and write voluntary payment. You have to make it under protest. You can make the payment if there is a coercion, but you have to make it under protest, and therefore, thereafter, retraction of the statement is very important. If you retract the statement after 6 months, again, it makes your case weak. Even in one of the cases, the Honorable High Court has ruled that although there is no time barring period for making a writ application, yet there is a doctrine of lashes. What is the doctrine of lashes? That the court will always pay heed to the vigilant and not to a person who has delayed the proceedings. So if you are vigilant, you have to go to the High Court very at an early stage. You cannot be a laggard and appeal to the High Court after months. So this is very important when you are handling investigation, summons, search, seizure cases. Now, few important litigation issues which have been clarified by the state of Maharashtra. Now, friends, you all know that you can amend your GSTR1 only once, right? So if you have put in the wrong GSTIN number, or if you have shown a B2B as B2C, then you can amend your GSTR1 for a transaction only once. What happens if you do not amend it, right? The Honorable State GST Department in the state of Maharashtra has issued this circular number 4, internal circular 4, where it has said that okay, for 17, 18, 18, 19, it was a new regime. And in case any supplier has shown it under B2B, a transaction which was B2B, it has shown it under B2C, or it has put in the GSTIN number of some other supplier, whether GSTIN number should be of some other supplier, then do not deny the input tax credit to the recipient. You take a chartered accountant certificate if the value of the input tax credit is more than 2.5 lakhs, or a self declaration with the ledgers and the reconciliation statement if the value is less than 2.5 lakhs. So this is a very good circular, a big relief, at least for the first 2 years of the GST regime. And I'm sure most of you would have such cases. We have, for almost all taxpayers, we have such a case where we had, put in the wrong GST number, B2B shown as B2C, etc., etc. Now, at least in the state of Maharashtra, you can take shelter under this circular and you can get the required relief. Now, with the relief in the same circular, they have again clarified something which is not in the law. So, friends, section 16(4) was amended by inserting a second provision to 16(4), which for the financial year 17-18, as you know, the time barring period for taking ITC was to September 2018. But it said that this time barring period would be extended till March 2019, right? In those cases where the supplier has furnished the GSTR1 by March 2019. Now here, by means of a circular, they have gone even beyond the legislation. And they have said, no, please don't read strictly the provision. They have said that you just interpret it in a way, if your supplier has only declared it in his GSTR1 between October and March 2019, only then you can take the input tax credit under provision to 16(4). But if your supplier has declared before, say, September 2018, then it was in normal course, it was under time barring period. Friends, this was not which is provided in the legislation. Here our respectful submissions are that the circular to extent of this point has gone beyond the legislation, and therefore it would be struck down as ultra virus if suitably represented. Our respectful submission in this case is that since provision to 16(4) is there, the time barring period has been extended till March 2019 to carve out a exception to this provision that would be ultra virus the section. Okay, we were just discussing this again in the Bombay High Court in the case of Male Anand Thermal Systems Private Limited versus Union of India very recently. It has said that, see, if you have made an error in your GSTR1, B2B reported as B2C, GSTR number not correct, etc., etc., that does not mean the recipient will not get the input tax credit. You can, although the time period for rectification of GSTR1 has been over, but that is a GST portal constraint. Okay. And you can always, the supplier can always rectify his GSTR1. And in case the tax has been paid, if all the conditions under section 16 of the CGST Act has been fulfilled. That is, you have an invoice, you have received the goods or services, tax has been paid to the government, and you have filed your return. Then, as a recipient, you will be eligible to take the input tax credit, irrespective of GSTR1 amendment or no amendment. Okay. Now, across the country, we are seeing suspension of GST registrations. Very recently, last week itself, in the state of Jharkhand, we have seen rampant suspensions. Suddenly on, I think, 23rd of Feb, we saw that one of the taxpayers GSTR1 GST registration was suspended and no communication was made. Thereafter, a communication came that there is a difference in your GSTR 3B and 1, whereas there was no difference. We had resorted to circular 26/2017, whereby one GSTR 1 and 3B was rectified by another GSTR 3B. So then we went to the Jharkhand state, Ranchi. And the moment we went, the officer said, no, no, it is okay. You give us all the documents, we are releasing. And there was a huge queue of more than 100 taxpayers over there. By bulk, they had suspended the registration without giving an opportunity of being heard. So in this case, I think every high court will rule accordingly. The Calcutta High Court, in the case of Galaxy Mechanical, has ruled. Yeah, please keep on typing in your chat box and we will take all the questions at the end. I see some questions coming in. Please keep on typing. We will take it at the end. So in the Calcutta High Court, in this case, has held that no, GSTR 1, 3B, or whatever be the case, without giving a notice, without asking any information, you just cannot go ahead and suspend GST, the registration of a taxpayer. So again, this is a very, very important precedent which you can use. I'm sure many of us would be going through this hardship. Okay, so now this is a very, very weird case where in case of a summon, the taxpayer, the person who was summoned, who was under investigation, he had sought for an adjournment after taking a doctor's certificate. Now the doctor was summoned also. I mean, this is the first time we have witnessed such a case. But yeah, this is the way things are moving, and sometimes the field formations, they go beyond their powers also, and then you have nothing but to knock the doors of the High Court. So there were two cases in this. One in the same taxpayer in the same state. In West Bengal, the DGGI was investigating in Siliguri as well as in Kolkata, and DGGI Siliguri and Kolkata, they were both investigating the same taxpayer in the same state separately. The Honorable Calcutta High Court said that, see, this is not done. You please tell your DGGI only one person has to investigate, Siliguri as well as Kolkata. Otherwise, Siliguri will ask something, Kolkata will ask something, same thing will be asked twice. Similarly, we have also applied to the DGGI and authorities that, okay, when the same taxpayer in various states on the same issue, if DGGI is investigating in various states, then it will be better that DGGI RK Puram in Delhi, it investigates the case centrally. The same has been represented before the CBIC and is under consideration. It will be a welcome step if this is done, especially for the large taxpayers. Okay, so now this is a prevalent issue which the advanced ruling authorities, they have said that, see, In case you are taking a reimbursement of the electricity expenses, then even that will be taxable as a composite supply of rent. So if you are giving your premises on rent, along with that, you also give him the electricity connection and take the reimbursement on the basis of actual units as per the sub meter, then it will not be as a pure agent. The electricity charges would be considered as a composite supply of the service of renting of immovable properties and would be taxable at 18%. Our respectful submissions in this case has always been that if this is not a pure agency service, just because the electric bill is coming in the name of the landlord, then what is? However, the issue is that, yeah, as rightly pointed out, the drafting of the rent agreements, right? The rent agreements are sometimes drafted in a way that you see they are vague and it invokes litigation. But if the agreements are drafted in the right way, there you say that, see, this is a pure agent, this is a pure reimbursement, and this is the way we are going to calculate the rentals. In fact, we have handled this case in service tax regime in so many states, and there was no issue at all. But the problem is the drafting of the rent agreement. Possibly in this case also the same would have been the case, and that is why this kind of a ruling. Okay, and this is a right example. Now, many a times the advance rulings are taken by the taxpayers because they want a negative order so that there is no issue with their customers. So they do not represent very, very strongly. So that is why we always say that advance ruling just gives a glimpse of the departmental understanding. However, they are not always to be taken as precedents. There is a lot of water which is to be flown under the bridge. Now, in this case, a particular person who was rendering the services of education, he was giving lectures, etc., right, on a paid basis. And the income tax authority says that, see, you are an employee. Why? Because in income tax, the authorities are benefited in case of an employer-employee relationship. Then no deductions are available. But here in GST, an employee relationship, sorry, would be exempt from GST. It would be no supply under Schedule 3. So the taxpayer very happily he went to the advanced ruling in GST and he said, see, this is my contract. In my contract, I have written it is principal to principal basis. Tell me whether it will be a supply or not. GST department also said that, see, it will be a supply. There is no doubt about it. It is a principal to principal contract. And the taxpayer has happily gone to the income tax and said, say, GST is taking this view. CBIC, CBDT, both are reportable to Ministry of Finance. You see between your two what to do. You cannot play hot and cold. GST cannot say it is a supply and charge GST, and you cannot say it is employer-employee and not allow me another deduction. So, okay, there was another case by Jharkhand High Court has ruled that interest, many a times while replying to the show cause notices, many of the taxpayers, they do not reply on the interest portion. Department very in one line, very, cunningly they write in the show cause that, okay, interest will also be charged and penalty will be charged as per the provisions of the GST law. And the poor taxpayer, he does not dispute that also. And thereafter, a base judgment is done on the interest. But the Jharkhand High Court has ruled in the case of RK Transport that interest also has to be calculated after giving the opportunity of being heard to the taxpayer. Interest cannot be without giving an opportunity of being heard. So what do we understand from this is that whenever you are replying to show cause, whenever you are appealing, then please also litigate for the interest portion. Also contest the interest and the penalty with suitable case laws. Yeah, so sometimes when we are going for appeal, then there is a pre-deposit which is required 10% as of now. So what we do, we file the appeal, and thereafter when the stay is not granted, then we go to the High Court, which is a wrong step. Friends, the moment you got a assessment order for which you don't want to pay a pre-deposit as per section 107, please immediately go to the High Court. Contest the assessment order in the High Court that it is not meritorious and balance of favor, balance of convenience lies in your favor, and that is why you contest the stay on the pre-deposit of 10%, get a order from the High Court and then go for the appeal. If you do the reverse, then it might be detrimental, as you see in this case. In this case, Kerala High Court has said that, see, once you have gone for the appeal under 107, then you have to comply with the terms of the section 107 and you have to give the pre-deposit. For pre-deposit, when the officer tells you that no, you have to give a pre-deposit, otherwise I will not hear your case. At that time, you cannot come to the High Court and contest for pre-deposit waiver. Penalty liquidated damages, we have held again and again that liquidated damages is not tolerance of an act. It is not an act itself, is it? It is in the nature of penalty. There should be no GST on liquidated damages. Even in service tax, now many of the tribunals have been holding. The current Kolkata tribunal in the case of Paradip Port Trust has held accordingly that liquidated damages would not be considered as a tolerance of an act or consideration for tolerance of an act. It is a penal provision for non-performance of the act, right? So we have discussed this in the previous colloquiums. We have discussed this in various webinars. So I will not get more into the nitty-gritties of this. Otherwise, this itself will take, half an hour. Okay, there are a few other judgments which you can go through at your own pace. Calcure, in the light of the recent development, especially section 38 subsection 2 proposed to be inserted by the Finance Bill 2022. Friends, first, you see, I would take you through this Calcutta High Court judgment. We have discussed this in the previous colloquiums, but again, just for reference. Now, in this case of LGW Industries Limited, the contest was again section 16(2) subsection C to the extent of non-availability of input tax credit to the recipients because the suppliers were not traceable or the suppliers did not pay the GST to the department or the supplier's GST number was cancelled ab initio. The Honorable High Court at Calcutta, it laid down a very, very crisp principle that in case the cancellation of the supplier's GST-IN has been done after your transaction has taken place, then the ITC cannot be denied if section 16(2) other conditions are fulfilled. If your transaction has happened after the supplier's GST-IN number has been cancelled, then only the ITC can be denied. I will repeat. You have to see your transaction. If your transaction has been cancelled after the GST-IN number of the supplier has been cancelled, then ITC will be denied if your transaction has happened before the GSTI number of the supplier has been cancelled, then ITC cannot be denied, right? However, if you see the third page, para 7, I think of the order, it lays down a very important point that identification of the supplier is the statutory liability of the recipient of the service or goods. This is the point which I would like to take up over here. The High Court at Calcutta has also ruled that, see, you have to identify your supply. Yes, your transaction should have been taken place through a bank account. You would have paid through bank account. You have the invoice. You have filed your return. You have seen that 3B and 1 of the supplier is filed. Great. However, you cannot say, I don't know the supplier, right? You have to identify the supplier as a recipient. Friends, in addition to this, section 38(2)(b) of the Finance Bill 2022, it lays down the following. It is proposed to insert 38(2)(b), which lays down that for a new registrant, if your supplier is newly registered in the GST law, then for few months, possibly the input tax credit would not be provided to you until the supplier streamlines. How much that time limit is going to be there, nobody knows. If your supplier has defaulted in payment of the tax, then input tax credit would be denied. It is almost same as 16(2)(c), but they have made it clear that if your supplier, see, tax has not been paid to the government, means your supplier has defaulted, then it's over. Now, 38(2)(b), 3, 4, 5, these are the most important thing, and that is why we have named this Kalkior. It has said put in 3 other restrictions on availment of input tax credit. What are they? Number 1, if there is a mismatch between GSTR 1 and 3B of your supplier, then input tax credit to you as a recipient will be denied, right? Number 2, if your supplier has taken an irregular input tax credit, if your supplier has taken a fake input tax credit, then your input tax credit will be denied. Now, what fake input tax credit, that they have not specified, which means if your supplier goes into a litigation on any ineligible input tax credit, the department can come to you and deny your input tax credit, because there is no one-to-one correlation. There is no GSTR 2 and 3. So if there is any litigation at your suppliers and he has not taken the right input tax credit, then your input tax credit would be denied. Or if your supplier has filed its GSTR return with a payment in cash which is less than the proportion as laid down in 49(12), 49(12) would be inserted. It is proposed. So they will insert, like rule 89B, they will insert 49(12), and they would say, okay, as of now it is 1% of tax needs to be paid by cash. Tomorrow it may be 2, it may be 5%. So if your supplier even defaults in these, then your input tax credit would be denied. In addition to this, as we have discussed, Calcutta High Court has also said that you need to identify your supplier. So friends, in this, we have come out with a checklist, right? And we are doing this due diligence in many of the taxpayers for many of their suppliers. The tax departments of major companies, they should do this, right? Future systems, this you can read at your own pace. We have discussed in the colloquiums. What is the supplier due diligence? You have to take a declaration from your supplier regarding these 3 points, 38 to B 3, 4, 5 at least. That there is no difference between their GSTR 1 and 3B. They have taken non-eligible input tax credit. They are not taking any fake input tax credit to the best of their understanding, and they are paying the input GST wide cash as required by the GST law. So this is an important declaration which needs to be taken from your suppliers. Already many of you would have been taking declaration that if there is a problem in your input tax credit, the suppliers a payment would be blocked, etc. In addition to this, a declaration under section 38, this needs to be added. And friends, very, very important. Do a Pareto analysis of your suppliers where 80% of your input tax credit is met by 20% of your suppliers. And it is very important to identify your suppliers. That is, you need to do a physical verification of your suppliers' premises. It may seem to be far-fetched, but I can tell you this would come to your rescue in litigations. It is your statutory liability to identify your suppliers. Of course, it may not be conclusive still, but the moment you show them that, see, we have gone to the supplier's premises, we have done a physical due diligence, and we have taken photographs of the supplier, his notice board was there, he was existing. So I have complied with all my formalities. After this, I am guarded by the doctrine of impossible performance. More than this, I cannot do, and therefore my input tax credit should not be blocked. Friends, councils sometimes would always, say that yes, this should be struck down. I am also agreeing, yes, these provisions should be struck down, but it is a fact that they will see light of day, and therefore as trade and industry, we need to be planning for the future. We need to put these points before our CFO. We need to put these points before our board, before our audit committees from today, that see, this is coming. We need to do a vendor due diligence, right? You should prepare a vendor profile. How do you prepare a vendor profile? It is very easy. Go to GST audit manual issued by the CBIC in October 2019. Annexure 1. In that format, you prepare a vendor profile. Take the copy of the vendor registration certificate, all the returns of the vendor 1 and 3B, annual return. If they don't give you 1 and 3B, at least take the annual return. All their income tax returns. Have the connect of the person, the KYC, do a KYC of the person who is the responsible person. You should have that person's PAN number, Aadhaar number, etc. Right? Accounting systems used by the vendor, you should be knowing. All of these are there in annexure 1. So when you go to the board, the obvious question would be, why are you requiring all this? We will not, your purchase department will say, we will not have this. We cannot ask the vendors to give all this. My vendors will go. So you need to show them, gentlemen, see 38 2B and also see GST audit manual. We are not saying this. It is the government of India which is saying this. Checking whether the vendor has filed GSTR 1 and 3B. Trend analysis from his annual return. Please do a trend analysis that how much of input tax he is paying through ITC, how much he is paying through cash. Is there a reduction in his payment of GST through cash? If yes, what is the reason? And checking of compliances. Again, if now you see from 1st of August, April 2022, e-invoices would be applicable on those businesses whose turnover, aggregate turnover is more than 20 crores. I am sure within few months or maybe year, it will come down to 5 crores, right? It is right in the offering. So practically all your suppliers would be under e-invoices very soon. So what you need to do, it is pertinent even today. you need to check whether your vendors who are registered for generating e-invoices on the IRP, are they generating e-invoices? If they are not giving you an e-invoice, then your input tax credit will be denied. So in your vendor due diligence, you need to have a column whether the vendor is providing e-invoice or not. If it is not providing e-invoice, you need to make sure that he is not featuring on the IRP portal. Hard copy of the invoice, that is the evidence under 16(2)(b), 16(2)(a) for claiming input tax credit. So you have to have either the hard copy of the invoice or the digitally signed copy of the invoice. You have to see whether the rate charged by the supplier is the correct rate or not. So this vendor due diligence, friends, this checklist we will share with you in our PPT. This is the Kalki or how you need to take the GST regime forward as tax heads of your respective organization, or as compliance heads, or as GST professionals, indirect tax professionals of your organizations, so as to ensure that you do not lose input tax credit and money for the organization. To do checklist for 21-22, we will share this with you. Okay, so most of this you would be doing. Okay, so after now, important things, the new things which you need to take care, many of you may not be doing this. After you all will have a physical stock taking. Okay, on 31st of March, I'm sure all of you will have a physical stock taking by either your auditors or by your internal teams. What do you do as a GST department? You need to ensure that any goods which have been written off as damaged, destroyed, lost, stolen, etc. I'm sorry, not damaged, but destroyed, lost, stolen, destroyed, given free of cost, etc. You need to reverse input tax credit which have been taken on those goods. Very, very important for all GST departments. Validate your import export code till 30th of June. Reconcile RCM payments versus foreign payments made. Goods sent for job work. Now you need to see whether goods sent for job work, they have come back within 1 year, or if they are capital goods within 3 years. If they have not come back, you need to reverse the input tax credit. And thereafter, these are all the general provisions, right? Rule 42, 43 reversal. Okay, TDS, TCS credits you need to avail. Computation of aggregate turnover, because a lot of in aggregate turnover you need to freeze, because your next year's compliances will depend upon that. Filing of LUT, fresh document series. Reconciliation of input tax credit. I have given 5-way reconciliation. Okay, this is a 5-way reconciliation because, as you know, from 1st of January, due to the 16(2)(a), from till 1st of January, you could take as per your books of accounts input tax credit due to Bharti Airtel judgment of the Supreme Court. After 1st of January, that is for the return period from December 2021, you need to take only on the basis of GSTR 2B. Therefore, you need to do this two parts reconciliation for 21-22, followed with the vendor taking ITC, which is missed out in GSTR 2B. I'm sure many of you would be having this. And friends, important is nowadays, in fact, in one of the cases in a PSU, we have seen that some supplier has shown that he has supplied presentation. He has supplied the goods to you and it is appearing in his GSTR 2B. Now the department is alleging that, see, your supplier is saying I have supplied to you, and you have not shown it as your supplier. Of course, you have not taken input tax credit. So what? Maybe you have clandestinely removed the goods. So it is very, very important to see what are the ITC you have not taken. Some supplier has disclosed that he has supplied to you, but you have not taken input tax credit. Neither have you shown it as an outward supply. So this has been questioned by one of the GST departments. You need to be ready with your answers. E-Waybill reconciliation, very recently, I think 1 or 2 weeks back, we have seen that now department is reconciling your at least GSTR1 with your E-Waybills generated. Please be prepared because it will come. Okay. Handling of block credit under 86A. Yeah, we will take all the questions. We will just next 10 minutes I will take to complete the presentation, and then we will take all the questions in the thereafter for 10-15 minutes. So handling of block credit under 86A. All of us have faced this block credit turmoil in our organizations. Very recently, I've discussed this Jharkhand issue where registrations were suspended. Now, block credit 86A. The Jharkhand High Court in the case of Winman Constructions has very clearly held that you have to have a reason to believe. You just cannot do a blocking of input tax credit without a reason to believe. You have to issue a notice at least to the department, to the taxpayer. This SOP has been laid down by the Delhi state government. You can go through at your own pace, but very important. Now it has laid down a very important thing that you see 2A, an immediate field visit will be done. So friends, please be prepared for this. If your input tax credit is blocked under 86A, at least in the state of Delhi, then you see immediate field visit will be done by the proper officer, right? So now there is although this circular, it starts with a promise that there is a relaxation. We are laying down an SOP. There is a relaxation in 86A. But on the contrary, it lays down a further stringent provision that immediately after blocking input tax credit, the proper officers have to do a field visit and they will do a investigation. You know, the field visit will happen in the form of an investigation under section 67 most of the times. Now, a very interesting case again. Now this in Gujarat High Court has ruled in the case of Samay Alloys India Private Limited. Now what this officer had done in Gujarat, he had blocked the input tax credit when the ITC ledger was 0, and thereafter he kept on making debit entries in the ITC ledger, and the ITC ledger became negative, and thereafter he kept on sending demand notices. The Gujarat High Court has held that input tax credit can only be blocked if it is available. If it is not available, it does not give the field officers the power to make it negative. ITC ledger negative, it cannot do. So very important, right? Because some of the field formations, they are very imaginative, right? Okay, few issues in input tax credit, GST refunds. Now there is a GST refund help desk. So all of you whose GST refund is stuck up, any refund, it can be TCS refund, TDS refund, it can be export refund, inverted duty refund. This is the help desk. Name of the nodal officer, Miss Anita Rawat, and their mail IDs, etc. are also shared. And there will be a video conferencing also in this. Okay, ITC on Mediclaim expenses. This we have stated many a times that please do not take the input tax credit of Mediclaim expenses But during the corona time, some taxpayers have resorted to the Ministry of Home Affairs order that required the employer to take mediclaim of all the employees, and therefore they said that it is a statutory requirement, and hence for that period, at least for a period of 1.5 months, the input tax credit on mediclaim expenses was allowable. The Advanced Ruling Authority in the case of RSWM Limited has denied this. Of course, it can be, it is just a ruling, but it is our respectful submissions also that for those 1.5 months, yeah, if it is substantial, you can take the credit and try to add values to your bottom line. But before and after that, one of the very, very senior consultants, he has said that no, there is a Cess Ahmedabad judgment in service tax. And on that basis, you take the input tax credit on Mediclaim. My respectful submissions in this is even in service tax, there is a larger bench judgment of Cess Bangalore. There is a High Court judgment that Mediclaim expenses input tax credit or SENVAT credit cannot be taken, and therefore it is better to avoid this kind of litigation. Solar's power plant input tax credit, advanced ruling authorities very, very strangely, they have allowed input tax credit because they said solar power plant is a plant and machinery. But our respectful submission, even if it is not a plant and machinery, it is an equipment, it is an movable property, and therefore input tax credit can be taken if you do not capitalize it in your books of accounts. Now, this is a very, very interesting case. I will just sometimes advanced ruling authorities can be very, very imaginative. Say, for example, you have taken a premises on rent for 21-22. Okay, so for March, let us give a more simplified example. For the month of March, when do you get your rent bill? Possibly on 1st of April. So in this case, the advanced ruling authorities have said that, gentlemen, date of invoice is not relevant for taking input tax credit. You have to see if the period for which you have taken the premises on rent is in March 2022. Even if the invoice is issued on 1st of April 2022, you can claim the input tax credit in 21-22, but not 22-23. In our respectful submissions, this is an imaginative judgment or ruling, and date of invoice is of course relevant. What the supplier does in terms of his time of supply, that is irrelevant. For you, if you get the invoice on 1st of April 2022 and you have received the services, then you need to take the input tax credit as per the date of the invoice, right? Okay, now the Andhra Pradesh High Court, a very, very important ruling which would be helpful to all of you, I suppose, who are claiming refunds. It says the suo motu order of the Supreme Court extending the date of the limitation that is applicable even for application for refund. That is from 20th of March 2020 till now. Even if your refund application is time barred, you can take shelter under the Honorable Supreme Court's order. Of course, it is a judgment of the Honorable AP High Court, but field formations will dispute this, if not in AP, but in other states. However, if this be applied on the other hand, then it would mean the department also get the benefit of issuing show cause notices to an extended period. So it is a double-edged sword, but nonetheless, I mean, for the state of Andhra Pradesh, for refund applications, you can take benefit under this judgment. Okay, we have talked about this. If you cannot for any reason make a refund application online under Rule 97 capital A, the application can be made manually and it would be a valid application, right? We have contested this in many of the departments where we had taken a refund, then paid the tax amount due to some glitches. Now we want the refund of the amount we have paid, but the department is saying, see, we agree with whatever you are saying, but now we have no option to refund you that money. We said, see, please go through Rule 97A. We will make you a manual application. He's saying, no, it was Rule 97A came when GSTR 1A and manual applications were there. I said, sir, our submission is Rule 97A still has not been scrapped. And if it is in the legislation, then it has to be abided by. The Honorable High Court of Bombay has also held accordingly. So if there are glitches in filing online refund applications, if it is a substantial amount, Rule 97A can be resorted to. Handling frivolous e-Waybill applications. You see, the Honorable Supreme Court has held, thereafter many High Court rulings are there, that in case there is a genuine hardship whereby you could not extend the e-Waybill, or maybe few digits of your invoice number was wrong, or maybe there were certain small procedural lapses, a penalty as high as 200% cannot be invoked, right? You can take shelter under this judgment in Satyam Shivam Papers Private Limited, where there was a traffic jam and then e-Waybill could not be extended. There was a lag in the e-Waybill expired during transportation, and the Honorable Supreme Court has held that due to this traffic jam, you cannot held the taxpayer or the transporter responsible, and therefore it was not a case for invoking 200% penalty. Almost the same case in Calcutta High Court has ruled in the case of Ashok Kumar Sureka. Same, if there is a vehicle background, then the e-Waybill may have expired. You cannot do much, and there cannot be a penalty of 200%. E-Waybill detention circular is there for the state of Maharashtra. We all face this problem where some other officers he detains the vehicle or he intercepts the vehicle, then how to make the order, where to file a appeal, how to get the appeal paper online, etc. And I think this would be applicable throughout India. You can go through this at your own pace. There are certain GST developments, GST portal development in terms of e-invoicing where it is held. So the root issue is that your invoice date, not your IRN date, is relevant for auto-populating in your GSTR1. So if your invoice date is say 24th of November, but your IRN date is 1st of December, the auto-population of the e-invoice will be in your GSTR1 for the period November 2021 and not December 2021, right? There are many other illustrations. We will share this presentation. You can go through these illustrations, right? Certain improvements in GSTR1, no more submit button. There will only be file button. Consolidated summary table wise, recipient wise would be available. Okay, MEIS customs and DGFT MEIS due date has been extended till 1st of April 2022. Sorry, 30th of April 2022. And ROSL due date has also been extended till I think 15th of March. So you can take benefit of all this. Section 120 and 49 of the customs law. So if you have made if you have an issue in your shipping bill or you have not claimed exemption of certain imports and now you want to claim exemption while amendment of your bill of entry or shipping bill, Various high courts have also ruled. The Telangana High Court in the case of Sony India Private Limited has ruled that a shipping bill rectification is not time bound. There is no limitation on 149. So you get it rectified and you can also get a refund if you have not claimed any exemption. So this is the procedure laid down by various high courts, various tribunals, but the department keeps on litigating this taking shelter under the Supreme Court judgment in the case of ITC Limited, but these judgments have been distinguished. Those of you who are importing on concessional rate of duty, the whole process from 1st of October 1st of April 2022 has been made online, right? There are various annexures. You can go through this. For those of you who are importing on concessional rate of duty, you need to file annexure 1, generate a IGCR identification number, and thereafter no need on every import bill of entry. There is no need to take a exemption and file for exemption again and again. Once exemption is filed, and then if there is any change in the goods, etc., then again you can file an amendment. Otherwise, no need. But a monthly statement has to be filed. Mind that. Russia Ukraine help desk has been formed. Okay, so you can take if you have any issues in international trade with Russia or Ukraine due to the ensuing war, then the email ID is help desk, and every week there will be a video conference also. You can use this link in the PPT. It will be shared with you and to raise the problems. RCMC registration certificate under DGFT will all be online from 1st of April 2022. So yeah, friends, so this is the presentation which we will share again with you. Now we will take up the questions which are there in the chat box. Just a second. Yeah. So Mr. Randhir Kumar says if GSTIN of the supplier is suspended, however, he is filing 1 and 3B appearing in our 2A. Can we claim input tax credit in such a case? Sir, our suggestion is do not do this. If the GSTIN is suspended, then you should not claim input tax credit. Ask him to get the suspension revoked and thereafter claim the input tax credit, even if he is filing GSTR 1 and 3B. As far as my understanding goes, once it is suspended, the taxpayer should not even be allowed to file GSTR 1 and 3B. But if the portal is allowing after suspension also to file 1 and 3B, but as a prudent recipient, do not claim input tax credit because you see, then it would be irregular. And maybe if he has not made the payment or he has defaulted the payment of GST or there is a irregularity in input tax credit, then there would be an allegation against you that even after having knowledge of the fact that there is a suspension for certain issues, even then you have claimed input tax credit and therefore it can be denied. Okay, Mr. Hitesh says, in this case, can the rental agreement be drafted in a way that the lessor can be considered as a pure agent? Yes. So rental agreement has to be very, very clear that these are the pure agent. You must revert to the rule for pure agency, that rule 35, I think, and you need to put down all the clauses in your agreement and say very clearly how the electricity will be calculated and why you are a pure agent. After that, if the department disputes, then it will be at their own peril and it will be a good case. But across the country, we have seen that once your agreement is correct and thereafter the department does not dispute this at all. Okay, Mr. Rajesh says if the GST audit is done and after 1 year of confliction of department can call and ask for other issues which are missed while calculating liability, or is it against the law? Officer has right to do all this once order is done. No, if the GST audit order has been received, thereafter section 65 cannot be invoked for that period. Of course, he has got various other ways. He can do an investigation, he can do a scrutiny, etc. He can invoke section 61, 64, etc. But he cannot invoke section 65. You have to be careful and you have to see what section he has invoked, right? Okay, Mr. Ashok says, if we protest the interest part in the SCN, can the interest be waived by any chance? Department says that interest cannot be waived, but penalty can be waived in some cases. Please advise. Yes, so waiver of interest will happen only if the demand is waived, right? Penalty, yes, it can be waived. However, what my point is, that if you do not contest for the interest portion at all, then the department will give you a demand for the interest on its own calculation, right? And will not even consider any calculation, and it can raise a frivolous demand. So you must always contest the interest portion also. For also, if you do not contest the interest portion, tomorrow if the liability is waived off for certain reason or limitations, etc., then the interest portion would still be open, right? Therefore, it is important that you also litigate for the interest portion. Okay, Mr. Indani says, kindly explain in detail regarding the missing transaction allowed earlier till September return and now till November. Yeah. So the amendment under 16(4) has been done, proposed to be done by the Finance Bill 2022, whereby now the time barring period for taking input tax credit is 30th of November 2022 for the period 2021-22 and subsequent periods. So if now they have come out of this issue, September return filing is, they are saying that, gentlemen, you go and file whatever return. You file April 2022 return in on 29th of November 2022. We will accept that input tax credit. But if you file even October's return on 1st of December 2022, we will not accept it. Your input tax credit for 21-22. So in fact, I would say it is a welcome step. Of course, there is an extension of ITC taking period, which is welcome, but even this is welcome. That there is no more question of September return, due date of return, date of filing, technical glitches, nothing. They are saying, boss, on 30th November till 30th November, whatever ITC you take in your return, we will allow you. Now, the question is, in fact, even yesterday I was discussing with a very, very senior counsel, and he was saying that, no, Vivekji, why is it required to take input tax credit in my 3B? Why cannot I just take it in my books? And the department has to allow. I said, sir, if you can argue this, hats off to you, and we will be, trade and industry will be very, very grateful to you. But पता होना चाहिए डिपार्टमेंट को, अगर पता ही नहीं चलेगा, आपने अपने बुक्स में ले लिया, डिपार्टमेंट को आपने बताया, 2 साल 3 साल बाद जब डिपार्टमेंट आया आपकी ऑडिट करने, then it becomes a Pandora's box and it becomes a free flow of input tax credit. Everything has got a limitation, and therefore one has to respect that. But yes, now that still is being contested in the court. Now this taking input tax credit, it is in 3B, it is in the books of account, that is another question. But Indaniji, to answer you, before 30th of November, whatever return you file, you can take the input tax credit for 21-22, right? Mr. Gonsalves says windshield grass under GST is currently classified under Chapter 70. Mr. Gonsalves, if you can please, further explain what is your question. Mr. Yogesh Patel says time limit to accept TDS credit appearing in GST and portal. Yes, there is no time limit, but we would say please accept it before the time barring period. That is now 30th of November. Okay. Miss Simran Arora says, can we get a copy of this presentation? Yes, it will be mailed to you and all the participants, Miss Arora. Mr. Randhir Kumar says plant and machinery is damaged after 2 years of use. If it is sold as scrapped in pieces of iron, do we need to reverse ITC or pay tax as per 18.6? Sir, 18.6. 17.5H is very, very clear. We have discussed this in various forums. It is goods destroyed, which needs to be input tax credit needs to be reversed, but not goods damaged. Damaged is partial destroyed, right? But destroyed is complete destruction. So if your goods are destroyed, then you need to reverse the input tax credit. In your case, you have said while it is damaged, it is sold as scrap, which means that it is destroyed. If it is destroyed, then you have to reverse input tax credit or the proportionate input tax credit after the depreciable value. But if it is damaged, then no need of reversal. Okay. Next is customs tariff got amended from 1st January, whereby windshield guard got reclassified by new entry under 870822. Whether we need to adopt customs classification for GST or should we wait for GST notification? This is because currently under Chapter 70, the GST rate for windshield glass is 18%. If it is classified under 870822, it will be attract 28%. Sir, we need to see this classification issues in more detail, right? Because these are the most critical issues. But prima facie, as per what you have queried, customs is the mother HSN. Even the GST law says, the GST notification says that you need to refer to the customs tariff. So if it has been reclassified under customs, you have to reclassify it under GST also, and possibly not wait for the notification, right? But again, we would say that classification, you need to be more, we need to see it in more detail. Okay, then provision of inventory ITC reversal required or not? Provision of inventory ITC reversal. I mean, Mr. Babur, you have to be a little more elaborate in your question. Mr. Ashok Jha says, sir, if invoice date is taken as date for display in GSTR1 and if IRN is generated after 11th of the month for last month invoice date, what will happen to GST liability of the month? Yes, Mr. Jha, even this has been clarified in our PPT. Now, if your GSTR1 is filed and thereafter you generate the IRN, even then it will appear in the month of the invoice date, right? It may not be available on your or as an auto population, but you have to take it manually in your GSTR1 as per your invoice date, not as per IRN date. It will be treated as a manual entry in your GSTR1. And when it is auto populated, it will get auto populated and you can take a dump in the Excel in that GSTR1 for the period as per your invoice date. This has been clarified with an illustration. We will share the PPT. Mr. Rajesh says in case of builder, principal place is in Pune at one place and project in Pune at another place, then address of project to be reported in GST as additional place of business, or if it is not reported, it is okay. You have to report it as an additional place of business, sir. Otherwise, if there is an investigation, there will be deep trouble. Mr. Ankit says import value not reflected in 2B. Can I claim input tax credit? Sir, if you have the bill of entry, yes. We have faced it across many of our taxpayers, our clients, they are facing this issue. But before taking the input tax credit, do shoot a mail to your jurisdictional officer and do shoot a mail to the CBIC, etc., etc. And if required, even if possible, even file a written representation before your jurisdictional officer. Mr. Babu says, what is the status of non-replied e-notice? Sir, they can do a best judgment assessment if you do not reply to a e-notice. Okay, Mr. Sunil Giri, thank you for your good wishes. Okay. Mr. Sunil Giri, sir, my question related to 96(6) of export with IGST payment. If we are importing the goods under advance license and the same we are using for manufacture of the export goods and exporting under LUT, their export obligations also we are discharging according to DGFT obligation under advance authorization. And now we are importing the goods with customs duty paid like normal, like then using the goods under manufacture and same we are exporting the goods with payment of IGST. So can I claim export refund of said IGST payment? Mr. Giri, if you can unmute and please reiterate. I mean, it's not very clear. Mr. Giri, if you can unmute yourself and ask your question. Okay. We'll take the next two questions before we wind up.
This is
Yeah.
Sunil, sir.
Yes, Mr. Giri.
सर यस सर मेरा एक क्वेश्चन है सर कि अब हम एडवांस लाइसेंस में जो मटेरियल इंपोर्ट कर रहे हैं ओके एंड एक्सपोर्टिंग द गुड्स अंडर एडवांस लाइसेंस एंड अंडर LUT करेक्ट सर दिस इज सेपरेट ट्रांजेक्शन एंड some imported goods we have paid the custom duty correct sir and that goods we are manufacturing and exporting the with payment IGST both are different transactions then that portion custom duty on portion we can claim the IGST for because we are paying the custom duty and that goods we are manufacturing using for export goods and paying the IGST.
Of course, yes. So
Sir,
there
nowadays
is a
sir,
distinction.
yeah, yeah sir. So DGI sir वो डिपार्टमेंट वाले सर आए थे हमारे इधर तो उन्होंने बोला कि नहीं अगर आप इरेस्पेक्टिव लाइसेंस मटेरियल कोई भी यूज कर रहे हो तो आप यू कैन नॉट क्लेम द IGST ऑफ रिफंड डिस्पाइट द थिंग्स आप कस्टम ड्यूटी पे कर रहे हो कुछ गुड्स पे और एडवांसेस भी क्लेम कर रहे हो मैंने सर उनको ये कहा कि हम बोथ आर टाइम्स डिफरेंट इज डिफरेंट क्योंकि 96 रूल सब रूल्स में मेंशन किया है सर which are we are paying the with export of goods with payment GST then AB and P mention is there we can we should not have that rule substitution तो सर मैंने कस्टमर की जो गुड्स पे पे कर रहा हूँ then we are exporting with the payment so why we can't claim the IGST payment That's right, sir.
See, we are handling a similar case in Mumbai. Okay.
Correct, sir.
I don't know whether you are facing the same problem in Mumbai or somewhere else. But, you know, yes, DGGI, they contest this, but it is very, very clear that ITC can be availed on this transaction and you can export with payment of ITC if you can bifurcate what you are doing
Correct, sir.
under advance authorization and what you are doing other. Otherwise, if you take advance authorization for one goods, you assume that a company which is registered in every state or it has got 5 factories. One is under advance authorization. The other factory is doing something other than advance authorization. It
Correct, sir.
does not mean that all will not be able to export with payment.
हाँ, yes, correct, sir. Sir, one से एक क्वेश्चन सर मतलब एक ऐड करना है सर उसी के लिए 96 रूल्स आप देखोगे ना सर, देन वहां सर मेंशन किया कि लाइसेंस एडवांस मटेरियल के आप नहीं यूज करोगे, एंड सेकंड वन आल्सो मटेरियल एक्सपोर्ट 0.1 डायमेंशन कंसेशन रेट ऑफ ड्यूटी, if you are availing that dimension, do you also not claim that on IGST payment goods, correct sir?
Right,
Machine
right,
export 0.1%. तो सर
right.
बहुत सारे ऐसा ऐसा तो नहीं है सर, अगर मैंने उस अगर पर्टिकुलर टाइम से तो मैं क्लेम ही नहीं कर पाऊंगा आईजीएसटी पेमेंट, अगर मैं सेकंड गुड्स आईजीएसटी कर रहा हूँ, बोथ आर
No, no.
डिफरेंट टाइम्स ना, करेक्ट सर?
Both are
करेक्ट सर,
both are
या
distinct transactions.
करेक्ट सर. So if anyone is reference is there sir, we can put the same to if our recording any grounds, any reference is there sir?
You
This is a
can
practical
contest on
question.
the section. You can contest on the section
Contest
itself.
the question.
There are precedents also which we can share with you. You share your case, but it is very, very clear. ITC can be taken and export for those transactions can be done with payment.
Yeah, thank you so much sir. Thank you. I will come up with my CFO sir also sir in future sir in this transaction because we have stopped it. That's why.
Yeah, yeah. So, yeah. Next, Mr. Prasad says expenses of purchase were booked after time bar. After time bar, but ITC entry were made before time bar. Can the credit be allowed? In other words, whether recording of expenses purchase is a must before time bar or only a recording of ITC is sufficient. Yeah. Mr. Prasad, very good question. We are, we have advised on this. See, while on your question, it is very simple. But when you go into the accounting aspects and when you go into the 16(2)(b, it becomes complicated. 16(2)(b says you should have received the goods or services. Only then you can claim input tax credit. You are saying, sir, I have recognized the receipt of the goods or services on 1st of October. But ITC I am taking on 30th of September. You are contradicting yourself, right? To some extent. But you can, yeah, you have got GTN to prove, I understand. But to some extent, you have not booked the input tax credit. I am not saying it is a lost case. I am playing the devil's advocate. But on your case, you have a point that, gentlemen, I have received the goods. I have your, as you rightly said, GTN to prove. But due to certain accounting issues, I have booked it afterwards. But my 16(2), all my conditions are satisfied. I have the invoice. I have received the goods physically. I have filed my return and the tax has been paid and it is appearing in my 2A or 2B. So I can claim the input tax credit if I claim it before the time barring period, right? Although booking has happened due to an accounting issue, you can always contest this, right? But if there is any way by which you can adjust this in your books of accounts to align it with your ITC, it will always be a better off case, right? But I am, I'm not saying that you have a lost case, but department can question this I'm sure you will come out on the winning side in this if you contest on 16.2. Okay, so I think we have answered all the queries. Thank you very much for joining this webinar, and we will meet again in the coming month in the new financial year. We will share the PPT with all of you, and thank you, and please keep on doing well. Thank you, Kajal.
Thank you.
Over to you.
Thank you very much, sir. Thank you.
Thank you, sir, for your valuable deliberation, and thanks to all our participants for joining to us today. We will be conducting this kind of webinar every month, and we hope that you all will join and make our session successful. We will share the PPT with everyone. Thank you all. See you all in our next event. Thank you so much all.
Thank you so much.